$44.8 billion. McCormick is literally trying to buy the entire condiment aisle.
Oh, come on. Unilever Foods is way more than mayonnaise, but a $65 billion food behemoth? I read the release. It screams integration nightmare.
You just hate fun synergies.
I hate when bankers pretend merging two slow growth giants creates a fast growth giant. And mid-2027 to close, regulators will absolutely block this.
We definitely need to unpack that timeline. But first, Eli Lilly is back at the Biotech buffet. The rundown. $6.3 billion for Centessa. Lilly is just not slowing down.
They are not, but read the fine print on that $47 a share valuation.
You always ruin the fun.
Hey, I just read the filings. It says up to $47. There are milestones baked in there. If Centessa trips on a clinical trial, that number drops fast.
Fair, but it is still a massive premium. And speaking of massive pharma bets, Biogen is advancing that Apellis buyout. $5.6 billion?
Which I actually hate.
What? Why? Apellis is a prime target right now.
It feels incredibly defensive. Biogen is throwing $5.5 billion at the wall because their own pipeline is looking thin. It is an expensive band-aid.
I strongly disagree. You are looking at it like a venture capitalist. I am looking at it like a banker who knows Biogen needs immediate commercial revenue. Apellis gives them that cash flow today.
We will see what the market thinks when the ink actually dries.
Deal. Moving on, QXO officially closed the Kodiak Building Partners acquisition. $2.25 billion.
Done and dusted. Brad Jacobs said he wanted to significantly expand their addressable market, and he is writing the checks to prove it.
Exactly. Meanwhile, Ares Management just closed their new opportunistic credit fund.
$10 billion.
$10 billion. And they are not sitting on it. They already cut a $1 billion check to back FTI infrastructure for a railway acquisition.
Private credit is literally funding the railroads now. It is like the 1800s, but with higher management fees.
That is the best description of private capital I have ever heard. Traditional banks are just sitting on their hands while Ares buys trains.
Well, someone has to lay the tracks. But speaking of building empires, we have a massive meal to digest today.
Literally, McCormick is merging with Unilever Foods, $44.8 billion.
Creating a $65 billion food behemoth. But Nate, they are projecting a mid-2027 close.
3 years of regulatory purgatory. We need to unpack this. The big one. I just cannot get past the sheer volume of mayonnaise and garlic powder we are talking about here. $44.8 billion.
It is a staggering amount of money for what is fundamentally a pantry consolidation play. McCormick buying Unilever Foods creates a $65 billion behemoth. But Nate, did you see the target close date on page 2 of the filing?
Mid-2027? Which in banker years means we have no idea when the regulators will actually clear this. So let us just pick a date far enough out that nobody remembers our original model.
Exactly, 30 months from now. Do you know how much can change in 30 months? By 2027, consumer staples could be in a completely different pricing cycle. To lock up almost $45 billion on a timeline like that is just massive execution risk.
See, I actually disagree with you on the risk profile here. Yes, 30 months is an eternity to wait for a closing dinner. But look at the strategic fit. You have McCormick dominating the spice rack and Unilever owning the condiments. It is the ultimate margin expansion play. You combine the global distribution networks, you squeeze the big grocers on shelf space, and suddenly you are printing cash.
Squeezing the big grocers is exactly why this is going to take 30 months to close. The FTC is going to look at this and see a cartel forming in aisle 4. I read through the press release, and their synergy projections are doing a lot of heavy lifting. They are assuming flawless integration across completely different global supply chains.
Oh, come on. You do not think the people who convince the world to put Old Bay on literally everything can figure out how to distribute Hellmann's? It is a brilliant defensive move. If McCormick does not buy Unilever Foods, private equity swoops in and chops it up for parts.
Private equity would not touch this at $44.8 billion. The multiple is completely detached from reality. McCormick is paying a massive premium for growth they should be building organically. I am looking at the footnotes on the financing structure right now, and the debt load they are taking on is going to severely limit their flexibility if raw material costs spike again.
Spoken like a true skeptic. But you have to admit, as a pure scale play, it is a masterpiece, creating a $65 billion food empire overnight. The advisory fees on this transaction alone probably funded 3 Hamptons houses this morning. I know my old managing directors are salivating.
I am sure your former colleagues are thrilled. I just feel bad for the poor integration team that has to spend the next 3 years figuring out how to merge these ancient corporate IT systems, while lawyers fight over antitrust filings.
That is the beauty of being the ideas guy, Maya. You sell the dream and let operations figure out the plumbing.
Spoken like a true former banker.
I cannot hide what I am. But speaking of massive premiums and selling the dream, we need to talk about what is happening in pharma right now. Eli Lilly just dropped $6.3 billion on Centessa, and the valuation math is fascinating.
Up to $47 a share. The biotech feeding frenzy is officially back. Voices.
So I'm reading this analyst note on the McCormick and Unilever Foods deal. They're calling it an unparalleled $65 billion global food behemoth that will radically reshape the consumer staples landscape.
Unparalleled? Nate, it's spices and mayonnaise. Let's calm down with the apocalyptic vocabulary.
Hey, don't disrespect the condiment aisle. You merge $44.8 billion worth of flavor profiles, you get a behemoth. I love the scale of this. It's a classic consolidation play.
I'm not arguing the scale, but did you catch the projected close date in the release?
Mid-2027.
Exactly. 3 years. That's 36 months of antitrust lawyers arguing about market share in the premium mustard sector. Radically reshape the landscape? Sure, maybe in the next presidential administration. Right now, it's just a massive advisory fee generating machine.
Spoken like a true cynic. But speaking of massive fee machines, the industry watchers are out in full force on Ares management. The take is that their new $10 billion credit fund proves private credit is the only way heavy infrastructure gets financed right now.
Honestly, I agree with them on that one. Look at the deployment data. Ares already dropped $1 billion of that just to back FTAI infrastructure buying a railway. $1 billion out the door, just like that.
See, that's where my banker brain gets itchy. $10 billion is a massive raise, yes. But saying infrastructure entirely relies on private credit? The public markets still exist. It's like everyone forgot how to syndicate a normal loan.
They didn't forget. The banks just don't want the duration risk on a literal railroad. Ares is stepping into a vacuum because they can.
Fair enough. They have the dry powder, but you know who else has dry powder and is suddenly spending it like it's burning a hole in their pockets?
Let me guess. Big Pharma.
Bingo. Eli, Lilly, and Biogen are dropping billions this week, and we need to talk about these biotech premiums. Spill the tea. I am telling you, Blackstone is circling senior. The whispers out of London are getting really loud.
Aerospace parts? Really? Senior is fine, but Blackstone doing heavy metal manufacturing right now feels a little off-brand for them.
Not when you look at global defense spending. It is a pure macro play. They buy senior, strip out the inefficiencies, and ride the massive defense budget wave.
You sound exactly like a pitch deck right now, Nate. Have you looked at Senior's margins lately? They are getting squeezed hard on supply chain costs. Blackstone notoriously hates margin compression.
They hate margin compression, but they absolutely love cheap valuations, and UK equities are basically on a fire sale right now.
Okay, fair point on the valuation. Speaking of massive piles of dry powder, did you see Ares just close that opportunistic credit fund at nearly $10 billion?
$10 billion. And they already dropped $1 billion of it backing FTAI infrastructure to buy railways. Railways. We are back in the 1800s, Maya. Private credit is literally funding the railroads.
I actually love that deal structure. It is so tangible. No bloated software multiples, just literal steel tracks. Though I wonder if Ares really dug into the environmental liabilities in FTAI's footnotes.
Nobody reads the footnotes on a moving train.
I do. That is literally my whole personality.
True, but wait, we have to talk about CoinShares. They are gearing up for their NASDAQ debut via SPAC.
Oh, come on. A crypto SPAC in this market? I thought we collectively agreed to leave SPACs in 2021.
The market has a very short memory when crypto is involved. The volatility on that opening day is going to be absolute chaos. I am popping popcorn for that ticker.
We'll save some of that popcorn for tomorrow morning. We have regional bank drama brewing. Bank of Hope is about to absorb $2.7 billion in deposits from SMBC Manubank, and I really want to see the details on that loan book. Tomorrow's radar. For momsen and for I am hitting refresh at 6 a.m. tomorrow for the Cyclerian and Corsana filings. I need to see the exact exchange ratio on that all-stock merger.
You do love a good ratio. I am way more focused on the regional bank shuffle. Bank of Hope is absorbing $2.7 billion in deposits from SMBC Manubank.
And $2.5 billion in loans. You cannot ignore the loan book.
I know, but it is a massive strategic bite for them.
Oh, come on. It is not massive. It is just basic survival. Regional banks have to bulk up right now just to cover their basic compliance costs.
Banker bias guilty. If you want actual drama, look to the UK. The rumor mill says Blackstone is in advanced talks to buy aerospace supplier Senior.
Wait, really? Aerospace? That feels entirely off-trend for Blackstone right now.
When you have infinite dry powder, everything looks like a target. Oh, and watch the crypto boards. CoinShares is hitting the NASDAQ tomorrow post-SPAC.
A crypto SPAC debut in this market? Now that is just brave. We will see who is left standing at the closing bell tomorrow.